Welcome back to Fast Money. Time for a little buzzkill. Check out shares of Constellation Brands down more than 12% today after the company cut its guidance, citing in part its investment in cannabis company Canopy Growth. The outgoing and incoming CEOs spoke to Mad Money's Jim Cramer moments ago.
There's been a lot of, I would say, negative press and hyperbole about it. But the truth of the matter is the Canadian government has just come out and said that the run rate currently is roughly $6 billion, which is exactly what we said it would be. We have a roughly 20 to 30% share of that. And we're anticipating that Canopy is going to be a $1 billion in revenue business in the next 12 to 18 months.
Did he say $1 billion revenue business, Canopy? He did, right?
Yeah,
I wasn't
sure
hearing things. All right, we should know that Canopy shares did soar today after Piper Jaffray initiated coverage on the space. Tim, what'd you make? Because some analysts are concerned about the balance sheet of Constellation Brands because of the commitments they have to make to Canopy.
That's right. And the rally today in Canopy, to me, was about reasserting a commitment that actually there's going to be enough cash flow to pay dividends. There's going to be enough cash flow to actually buy these warrants that will give them the north of 50%. Look, these guys said a lot of things today that were very bullish, I think, for cannabis. And ultimately, the growth opportunity of a lifetime, these guys are early in. And look at what's going on with their core business, low-end wine. That's why they're going for growth.
But what they say is it bullish for Constellation?
Well, I don't know if it's bullish for Constellation because it's not. I mean, listen, if you're going to play the space, where's the growth area in this? What is Constellation doing? They're buying into the cannabis industry. So why would I want to buy Constellation? Why wouldn't I buy into the cannabis industry? We know that this is one of the secular growth stories out there at this point in time. So I'd much rather be in the ones that are going to be bought than the buyers.
You know, originally I would have disagreed with that. But now watching this play out with Constellation and how poorly that stock has reacted over the last 6-9 months. Year ago, pre-Canopy and all the rest of that. Yeah, I mean, Constellation seemed like they were humming along. And then suddenly, ever since they started putting the money towards that, which was the growth, and I don't think it was the wrong thing, I think it was the right thing to do, but their own stock and their own
40% since October.
Yes, absolutely been beaten down.
So there are real questions about its ability to
find that growth
on their main.
Everything.
Although again, I think that's that today was reaffirmed, and that's one of the reasons why you had one stock down 10, one stock up 10.
All right. Well, the pot stocks have been on fire to start the year. So what are some of the big catalysts for 2019? Tim's going to head on over to the plasma.
Yeah, and let's be clear. I mean, this has been a rocky ride for the cannabis space. And if you think about the last month, we've talked about markets that have rallied. Well, I want to be clear also. This is a market that actually, over the last, say, 3 weeks, has actually had an enormous run. You're up about 35% in essentially since the start of the year across the sector. So what's going to happen in 2019? Well, first of all, what we're going to do is I think we're going to weed out the winners. And I think you're actually going to see enormous bifurcation between brands and not just having a big multi-state operator, but actually the companies that are executing. That's what we want to see. Again, we've had to work through this enormous backlog of RTOs. And frankly, I think there's more to go for this market on the public side. But that's good news. The bottom line is also in 2019, guess what? Check marks the spot. There's going to be more legislation that is going to be a major driver for a sector. That's obviously the East Coast, which looks like it's about to flip. New York is certainly rushing, I think, to legalize, and New York is certainly rushing to even beat New Jersey to it. So when the East Coast goes, you've got a major demographic story to get behind what's already this growth story. And again, I'm less concerned about run rates in Canada right now. I'm concerned about the United States. I'm concerned about California, which is the biggest market in the world right now. And then bottom line, consumer euphoria. This is one of these things where look at what happened with this farm bill and the hemp component of the farm bill and the footprint that now wellness companies can put into, and I'm talking about big multinational companies, gigantic companies that are in the wellness space, are in the cosmetic space. They are working right now. It gets you into food processing and ag processing. These are the catalysts in 2019 because this is the sophistication of an industry that is growing up. And yeah, I think there's enormous catalysts. By the way, it was healthy to see what the market did. The public markets got way ahead of themselves, probably got too knocked down, and actually created a great opportunity here.
Top 2 picks, Tim, right now.
Well, first of all, I actually think Canopy, if you think about their positioning both as a global company through Constellation Brands, the fact of the matter is they do have a footprint in the U.S. Their EBU acquisition certainly gets them into both the hemp and the science side of the business. I think a name like Acreage is proving that a multi-state operator is somebody that can actually execute. And let's watch some of these big guys that raised a lot of money and actually have to follow through. But we're getting some good signs there. And I think some of these bigger names are ones you can stay with.
Hey, Tim, it's BK, longtime listener, first-time caller.
Yes, you are.
Great on this, but I'm curious. You mentioned the wellness companies. Do they suffer the same fate that Constellation brand does? Should I just be buying Canopy and the producers, or are the wellness companies a good buy as well?
Well, the fact that basically hemp-based CBD is now, with a little bit of tweaking by the FDA, and let's be clear, they still have to really determine where you go from plant to product, but that you're going to have an opportunity for people like L'Oreal, who's already in the business through Body Shop and other places. But I think, whether it's Whole Foods that's going to be a major distributor, or Walgreens, or places that, this is going to be a whole group of people that, at least for right now, have no interest in anything psychotropic that has to deal with cannabis. But whether it's hemp or whether it's wellness-based, I would take a look at some of these names, and you're going to see it happen.